Good morning. It is Saturday, March 7th, 2026. This is the DX Today AI Daily Brief. We begin this weekend with a significant shakeup in Washington, where the relationship between the federal government and top-tier AI labs has shifted dramatically over the last 24 hours. Beyond the Capitol, we are tracking major strategic pivots at Tesla and Block, new onshore chip manufacturing, and the latest developments in autonomous transit abroad. Let's examine the details.
In a decisive move, the Pentagon has formally designated Anthropic as a supply chain risk. The directive, issued by the Trump administration, orders all federal agencies to cease using the company's technology immediately. Sources close to the negotiation indicate the breakdown occurred after Anthropic refused to waive specific safety protocols regarding mass surveillance capabilities requested by defense officials. This marks a rare instance of a leading American AI laboratory being effectively locked out of government contracts due to ethical friction over deployment safeguards.
Almost immediately following the blacklist order against Anthropic, OpenAI has confirmed a new partnership with the U.S. Department of Defense. This agreement will see OpenAI's models deployed for various government applications. The timing suggests a rapid realignment of federal AI procurement, favoring vendors willing to align more closely with current defense requirements. Analysts note that this effectively bifurcates the top-tier model market into government-aligned and commercial-focused entities.
EdTech veteran Criteo has secured a position as the first integration partner for OpenAI's emerging advertising pilot within ChatGPT. This collaboration aims to insert brands directly into conversational streams. Rather than traditional banner placements, Criteo is developing infrastructure to connect brands to relevant dialogue queries. This move signals the beginning of the long-anticipated monetization phase for conversational AI search, potentially disrupting the traditional keyword bidding economy.
Block CEO Jack Dorsey has announced a significant reduction in the company's workforce, characterizing the move as a necessary step to pivot the financial services firm entirely toward artificial intelligence. In a memo to staff, Dorsey emphasized that the company is going all in on AI technologies to streamline operations and develop new fintech products. This restructuring mirrors a broader trend of tech companies trading headcount for compute resources as they attempt to modernize legacy platforms.
Google is aggressively expanding its footprint in the agentic AI space by rolling out its AI Mode Canvas tool to all users in the United States. The update introduces specialized features for coding and writing, designed to allow the AI to act more as a collaborator than a simple text generator. This release is seen as a direct response to competitor platforms that have recently gained traction in the developer community, as Google attempts to retain its dominance in workspace productivity.
Meta has begun testing a new AI shopping research tool within the United States. The initiative is designed to overhaul how users discover products across Facebook and Instagram, utilizing advanced pattern recognition to predict consumer preference more accurately. By integrating this research tool, Meta aims to close the loop between social discovery and purchase, an area where conversion rates have historically struggled to match the volume of user engagement.
Manufacturing giant Flex has expanded its agreement with AMD to produce the Instinct MI355X AI GPU platform. Notably, this manufacturing will take place onshore in the United States. This deal represents a critical step in diversifying the AI hardware supply chain, which has remained heavily reliant on overseas production. By domesticating the assembly of these high-performance chips, both companies are looking to mitigate geopolitical risks associated with semiconductor logistics.
Perplexity has released a new suite of open-source embedding models. These tools are engineered specifically to enhance the performance of search systems and information retrieval. By open-sourcing these efficient models, the company is offering developers a way to build more responsive search applications without the high computational overhead usually associated with proprietary state-of-the-art embeddings. It is a strategic play to embed their architecture into the broader developer ecosystem.
Tesla has announced a formal strategic pivot, prioritizing artificial intelligence and robotics over its traditional automotive business. This shift comes as the company reports its first year-over-year decline in automotive revenue. The leadership is signaling that the company's future valuation will rely less on selling electric vehicles and more on licensing its autonomous driving stack and deploying humanoid robotics, essentially reclassifying the car manufacturer as an AI logistics firm.
Alphabet's Waymo unit has unveiled its roadmap for entering the European market, specifically targeting London for its next robotaxi service launch. The timeline sets an ambitious pace for regulatory approval and mapping of the complex London street network. If successful, this would be one of the first major deployments of fully autonomous American commercial transit technology in a European capital, testing the adaptability of Waymo's driving models in a significantly different traffic environment.
AI startup RowSpace has officially launched to the public, backed by $50 million in initial funding. The company is carving out a niche by building specialized AI tools exclusively for the private equity sector. Their platform promises to automate the due diligence and market analysis processes that traditionally require thousands of analyst hours. This launch highlights the growing trend of vertical AI, systems trained for deep expertise in specific high-value industries rather than general-purpose tasks.
Dyna AI has closed an 8-figure Series A funding round to accelerate the deployment of its agentic AI solutions. The firm focuses on the financial services industry, providing autonomous agents capable of handling complex transaction monitoring and customer service workflows. Investors are betting that the highly regulated nature of finance requires these specialized, audit-friendly agents rather than broad large language models, positioning Dyna AI as a compliance-first automation provider. That concludes our briefing for today. As the landscape between government policy and private sector innovation continues to fracture and reform, we will remain vigilant on how these changes affect the global market. For DX Today, stay curious.